Hey, we're going to get rolling this week, but before we get to the markets, a couple of weeks ago I gave you a county fair story, and this past week was our state fair, and it was an awesome fair for our family as my daughter exhibited the champion Angus steer with a home raised steer. So anytime you can do that at the state fair, we've got to feel pretty good. So just wanted to share that with you before we get to the markets. I just want to do a quick review of the USDA report on the yield side of it, and I have to admit, the yield changes did surprise me as the USDA lowered the corn yield down to 175.4, but they raised the bean yield to match the record up at 51.9 bushels an acre. And on the chart you see in front of you right now, you need to keep in mind that the national average corn yield, the record was 177. So we're a couple of bushels below that record, but the bean yield is forecasted right at this record yield. Now, when we take a step back, either that corn yield is too low or the bean yield is too high. I think you can argue it really either way. As we visit with producers, though, it just seems like guys, and I know it's a time of the year, is a little more confident with their corn crop than what they're seeing over on soybeans. We mention all along in here, whether it's our webinars or on our daily advisory report, on how we really need to take a step back and look at global production more than U.S. production. And on the chart in front of us is the corn production over the previous 3 years. What's important to remember, though, when you look at this graph, is that U.S., Ukraine, and EU are northern hemisphere crops. So our 22-23 productions, what we're going to harvest this fall, where Brazil and Argentina are southern hemisphere crops, and they're going to harvest that next May through August time frame. But what I want to highlight here is a U.S. production from last year to this year is down around 700 million bushels. Ukraine, because of less planted acres because of the war, their production's forecast to be down around 500 million bushels. In the EU, because of its drought, we're getting around a 300 million bushel drop in production. So in the northern hemisphere, we're seeing a substantial reduction in the corn crop this year compared to last. Now South America will help out, as you see the Brazil bean crop from this year, from 21-22, is up almost 1 billion bushels from a year ago. But in the big picture, world-ending carryout levels are going to drop on corn from this past year. The other thing I wanted to show this year too is we talk so much about what U.S. yield is. If U.S. yield changes a bushel an acre, that's only 80 to 90 million bushels of corn. Look how much the world production has changed. That's where we got to have a focus on what's going on in the whole world. We want to switch over to beans now. And just like we mentioned before, U.S. beans for 22-23 is harvested this fall, where Brazil and Argentina will be next winter. Let's say Brazil start harvesting aggressively February, March, Argentina a little bit later. What we want to point out on here, though, on soybeans is look at Brazil with a normal crop and the increased acreage. Overall production could increase almost 800 million bushels from the previous year. So when you take a step back and you look at the global production trends, you probably need to put a little more support underneath the corn market, but beans could be vulnerable heading out into next spring if this Brazil crop is realized. The other concern we have maybe on beans long term is we're hearing more producers considering storing soybeans this year than in years past. They would get moved in their winter months. The next chart I want to show you is a crude oil chart, and I had this one up a couple of weeks ago. Okay, when we looked at the crude oil range, saying, hey, if crude's going to trade between $100 and $120 a barrel, we could see $6.25 to $7.25 corn. If we trade in an $80 to $100 range, that would equate to $5.25 to $6.25. And then if it dropped down below $80, look at that corn to drop in the lower end of the range. What we need to be willing to do, though, is change our bias a little bit when the supply-demand reports change. And now with world-ending carryout coming down on corn, we just think if crude oil sticks in an $80 to $100 barrel range, that corn's probably more $5.50 to $6.50. We probably should bump that price up with a little bit more fundamental support. The last chart we want to go through on the day is a natural gas chart, as that this week is pushing back near near the highs of 2022. And our reference with natural gas is this is the only market that still is holding a bunch of war premium, as EU natural gas prices are extremely high as Russia holds back supply. Over the last couple of weeks, we've seen both crude oil and the wheat market, which are the other two that really rallied on the war, drop below pre-war levels. This is really the last market that is held together. That's why I wanted to show this to you here. As we wrap up this week, the thing we got to encourage is don't get too bearish in here on some hard breaks in the market, and don't get too bullish on big rallies. Keep in mind on what you need to move during the fall of the year. Reward it with some small sales. And then on the other hand, storing some bushels, there's nothing wrong with that, as we think there's some good underlying support in these markets. If you have any suggestions for an upcoming webinar, feel free to give us a call or drop us an email. Have a great day.